Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good evening, everyone. It is March the 13th at 6:23 p.m. So I wonder if everybody noticed today that the 10-minute, not the 15, remember the volatility, not the 15 didn't have a really good, strong, clean divergence, but the 10-minute had really nice divergence. It was above the signal line right here. And that was this morning at about 20 after 10. Well, these are the options for the SPY, for instance, 497, 547, excuse me. So notice that they also had the bottom in their technical patterns, and the bottom in the price was at about the same time. So on the put options, right? 547 puts on the SPY didn't really make a grand return like you'd think, but it made a decent return from about about 9 cents or something like that, up to about 66 cents. So about 7 times your money or something like that on the SPY. And I'll show you the SPY. Strangely enough, the technical pattern on the SPY was yesterday, afternoon, about 2:40 in the afternoon, but it was not really confirmed with a clean, solid upside divergence on volatility until this morning. And that was here this morning, 10 after 10, 20 after 10, right? So this was the technical pattern then, broken, see? But the key is that it was broken already, maybe, and this pattern was just beginning. And the options prices, even though you may think, if you're wrong, but thinking it, but you would think that the options prices for the puts would have been at their cheapest level here. That's not true. They were the cheapest level here because that matched volatility. See, you have to have volatility that moves in your direction of the pattern. Same thing would be true with the Qs. See, 20 after 10, even though technically it was still really weak. Again, the volatility was just beginning. So if you pay close attention to the volatility, there's not too many ways you can go wrong. Same thing is true with the Qs. I mean, the Russell 2000, by the way. So here about 20 after 10, 10:30 this morning, about at same time, 20 after. So Russell 2000, let's see what those puts did. Mm. 97. See, they were only about 6 cents, and they moved up to 70, 74, 75 cents. So that would be at least 12 or 13 times your money. So once again, the Russell 2000 outperformed because it's just the nature of the being probably cheaper on the price. The Russell 2000 is only 200 or thereabouts, and the SPY is 550. QQQ 468, 470. So it's the index is a lot cheaper. So when it slides for a dramatic amount, like we're seeing today or for the last couple of weeks, it has a tendency to have a higher return. You can also tell that by looking at the option price when you think, well, here's the SPY or the SPY or the QQQ puts, and you know they want too much money for the options that I would think that would be sufficiently far enough out of the money to be under 10 cents, but yet they're still not under 10 cents. So you either forego the activity of trading on those indexes altogether and go with the IWM, or you can just buy the short indexes if you feel like it. Um, but really, there's no reason to really get involved in the short indexes and stuff like that. And as far as a good return would go, because they have been dropping steadily, and I can't say that I've warned you guys multiple times that this is the case. That looks like this is headed even lower, but it still doesn't matter that I've said that, even though it's true. The only way you can make money is by trading the near term puts, and when they have a good pattern on them, and the volatility confirms it in reverse. So today, that was a 10-minute chart. So that's all you need to know. It's great that the weekly charts or the daily charts on all of the indexes are weak. Oh, that's great. But the catalyst to really drive the options prices is when the volatility has a nice clean divergence, just like it did over here. Had a clean divergence to the downside. Now it's to the upside. So let's see, that's been all of 2 days. So 12 times your money today on the Russell 2000. The other day, I believe, is 40 or 60 times your money. And that's just been in the past 2 days. Think about it. Pretty good return on your money. 50 times or 60 times 10 or 12. That'd be 700 times your money. All right. We'll talk to you guys later. I'm still in Iceland, so be here for a while longer. Talk to you a little bit later. Have a good night.